The next company on our radar is PNB Housing, also on the back of results. And the stock has cooled off, actually, from the morning highs. It opened positive, but since then, it's down about 4% from the peak. And overall, if you look at PNB Housing in line with the market correction, the stock is about 25% off the 52-week high itself. So what are the trends in the third quarter and what's the outlook? Well, let's take this up with Mr. Girish Kousgi, Managing Director and CEO at PNB Housing. Mr. Kousgi, always a pleasure having you on. So, I mean, year on year, the growth number looks okay, but sequentially, of course, one can argue that over, Q2, Q3 disbursements are lower. But I want to start with the brighter spark in the numbers, and that's margins. Because you've actually managed to improve margins by a shade quarter on quarter, even year on year, the margins are looking better. So what went into that? How is your cost of borrowing moving? And what can you guide for, considering the market is expecting rate cuts this year from the Reserve Bank?
Well, good morning, Surabhi. I think if you look at quarter three, it was pretty good. If you look at the demand, mortgage industry is doing well. Demand is quite robust. But I think this year, quarter one, quarter two, quarter three, there has been some challenge for the industry because of various reasons, and quarter three the challenge was much more. But if you see PNB Housing, quarter one, quarter two, quarter three, all the 3 quarters we have done pretty well. Well, if you compare with quarter two, I think disbursement is slightly up. The book has grown by 4% on retail, so I think quarter three is pretty good. There's an income growth of 11%, net interest income growth of 17%. PAT growth of 43%. If you look at NIM, it is quite stable. If you look at ROA, it is 2.51. I think on all the metrics, we have done pretty well. Talking about margin, our guidance is 3.5%. So we will be able to maintain around the current levels, let's say about 3.6 to 3.65 in that range. Our cost of borrowing now is 7.83, a notch lower than what it was in the previous quarter, 1 bp lower. So we've been able to manage a cost and slightly increase the yield. Yield now is 10.12. So I think overall it's a pretty good quarter, because you will see some of the companies in this quarter showing YOY decline in disbursement. That's because of certain challenges, nothing to do with the demand.
So you're saying that even if we get into a rate cut cycle, you will maintain margins at around 3.6, 3.7%, right?
Yeah, that's right. I think we are expecting a rate cut of about 25 bips. That will have an impact of 10 bips on the cost of borrowing. We'll be able to pass on that. I will be able to maintain margin around, see, guidance is 3.5. We'll be definitely much above that. And also, if you look at the growth guidance for this year on retail was 17%. We are at 17.5%. So we have already kind of, ahead in terms of our achievement, both in terms of book and disbursement. So I think
so just coming on disbursements in a second to complete that margin, answer. What you're saying is 3.6%, but for FY25, to be fair, I mean, it will be better if you give us some sense of what happens as we get into FY26, because the rate cuts, might continue for the rest of the year. So will you be able to hold margins at 3.6%, even say in the first half of the new fiscal?
See, about next 2 to 3 quarters, we'll be able to maintain around that level. And after that, the margin will slightly start improving for 3 reasons. One, we are changing segments. We are growing our prime book slower compared to emerging and affordable. Affordable now the book is 3,838 crores. We have actually doubled affordable book in last 9 months. So we are increasing affordable, we are increasing the growth in emerging, and lowering the pace of growth in prime. So this is one. We are moving segments, and also we are increasing yield in all the 3 segments, whether it is prime, emerging or affordable, number 1. Number 2, we'll be starting corporate, so that will add to the margins, and therefore because of these reasons we'll be able to hold.
Okay, hi Mr. Kousgi, and good morning. Good to see you, Ben. The affordable book, in the past, I think you've said you're looking to grow to around 5,000 crores odd. Any geographic targets you have out there?
No, we are actually present in 13 states. We will expand to 15. So for us, the contribution geographically, I think it is almost similar between South, North and West. South is slightly higher. I think that is more by design. And we have disbursed about 930 crores in quarter 3. And we should disburse a little over 1,200 crores in quarter 4. That will take us to a target of close to 5,000 crore book in affordable by March.
Okay. You mentioned corporate, sir, a new segment, and you said that will, of course, aid margins. Can you elaborate on that? Affordable, you've given us some targets, but what are you thinking with respect to the corporate segment?
I think corporate this year will be able to start. So I think coming year we should be looking at about 1,500 odd crores disbursement. So we don't have a big target on corporate. It will be very small in our overall portfolio. It will be always less than 10% at any given point in time.
And when you say corporate, this would be lending to exactly what sort of entities?
So this will be lending to developers for largely construction purpose.
Okay, so there could be an element of construction financing coming in as well. So that brings us back to now the overall picture on AUM on year. It's up 12% in the third quarter. FY25, what should be the AUM growth? And then FY26, I know it's a little early to ask this question, but since you're going to start this new segment and affordable is growing, what can shareholders look out for?
I think if you look at last almost 3 odd years, we are not selling any portfolio or the pool, and therefore I think more relevant for a discussion will be on the book growth, especially on retail. So retail this year, our guidance was 17%. We are already at 17.5. So we'll be able to surpass our guidance of 17% this year. And for next couple of years, we have detailed our growth between 17 to 18% on book, which will take us to 1 lakh crore of retail book by FY27. So that is what we've already, laid out. So we'll be able to continue with the trend.
That's on the retail side. And total AUM?
So as I mentioned to you, we are not actively selling any pool now. So today AUM is about close to 5,500. So that will run off over a period of time. The focus for us mainly is to grow our book. We want to grow our balance sheet. And in that context, we'll be more particular with respect to retail and corporate growth.
All right, Mr. Kousgi, very quickly, Quality Investment Holdings, that's the Carlyle Group. They have 30% stake, which has come down to around 10%. Any communication from them with regard to what they plan on doing with this 10%?
No, actually, we never engage on these things because Carlyle is an investor and they're on the board, and it is left to their decision. We generally don't get into investment decisions.
All right, because from a shareholder perspective, the street will be waiting by for this to get cleared out. And that could be one of the triggers for the re-rating. So we'll keep an eye out on that front. Appreciate you joining in, Mr. Kousgi. Thanks a lot for joining in and detailing the past quarter's numbers and the vision that you have going ahead as well.